CG Power and Industrial Solutions Ltd recently reported its Q2 FY25 results, missing market expectations. The company's revenue grew by 21% to 2,413 crore rupees, beating estimates of 2,329.48 crore rupees. However, EBITDA fell 4% to 295 crore rupees, below the expected 342.2 crore rupees, with margins declining to 12.2% versus the estimate of 14.7%. Net profit dropped 9% to 220 crore rupees, missing the Bloomberg estimate of 258.5 crore rupees. The company attributed the margin pressure to a 25.6% increase in material costs, leading to the earnings miss. Let's take a closer look at CG Power and Industrial Solutions Ltd. With a market capitalization of 1,25,183 crore rupees, the company is well established in the industrial solutions space. The stock is currently trading at 819 rupees with a high price to earnings (PE) ratio of 139, reflecting a lofty valuation. This high valuation, along with the recent surge in share price, can be attributed to the company's strategic foray into the semiconductor space. With a strong return on capital employed (ROCE) of 46.6% and an EPS of 9 rupees and 59 paise, CG Power continues to showcase profitability. Looking at the historical price to earnings (PE) ratio of CG Power and Industrial Solutions Ltd, we can see a significant upward trend. The current PE ratio stands at 139, well above its historical median PE of 69.3. This surge in valuation reflects the company's improved earnings performance over the past few years, as evidenced by the positive TTM EPS growth. While the company's PE is at a high level, this increase aligns with its recent expansion into the semiconductor space, driving both investor confidence and market expectations higher. CG Power and Industrial Solutions Ltd has undergone a remarkable turnaround in recent years. While the company experienced losses a few years ago, with net losses as high as 1,331 crore rupees in 2020, it has since made a strong recovery. Over the last 3 years, compounded profit growth has surged by 141%, and the company has delivered consistent improvements in both sales and profitability. However, investors should keep in mind its past struggles and evaluate the risks associated with its earlier financial instability before making an investment decision, despite the recent positive momentum. From a technical standpoint, CG Power and Industrial Solutions Ltd has been following a clear upward channel, as shown in the price chart. The stock is currently trading at 831 rupees and 50 paise, which is not far from its recent peak of 875 rupees, indicating strong momentum and bullish sentiment. Despite the upward trend, it's important to note that the stock isn't trading at a significant discount, suggesting limited immediate upside unless there's a breakout above the upper trend line. Investors should consider this technical setup when assessing potential entry points. Let's take a look at Bajaj Housing Finance Ltd, a relatively new entrant to the stock market, which saw an impressive listing debut with more than 100% premium. The company currently has a market capitalization of 1,16,036 crore rupees, trading at a price of 139 rupees. With a price to earnings (PE) ratio of 67, it reflects investor optimism about its future growth. The company has a return on capital employed (ROCE) of 9.42% and an earnings per share (EPS) of 2 rupees and 58 paise, indicating its profitability in the competitive housing finance space. Bajaj Housing Finance Ltd has seen its valuation come down recently, with the price to earnings (PE) ratio dropping from above 60 to around 56, closer to its median PE of 59.5. However, it's important to note that despite this decline, the company's PE ratio is still relatively high compared to its competitors in the housing finance space. This elevated valuation reflects the market's strong confidence in Bajaj Housing Finance's growth potential, but investors should weigh this factor carefully when comparing it with other players in the sector. Bajaj Housing Finance Ltd has demonstrated consistent growth over the years, with compounded sales growth of 34% over the last 3 years. The company has also delivered impressive compounded profit growth of 56%, showcasing its ability to scale profitability. Net profit has grown steadily, rising from 710 crore rupees in 2022 to 1,731 crore rupees in 2024, reflecting a strong financial foundation. As part of the Bajaj brand, known for trust and reliability, the company benefits from a valuation premium in the market, further enhancing investor confidence in its long-term prospects. Bajaj Housing Finance Ltd is currently attempting to take support near the 135 rupee level, as seen in the recent price action. The stock is available at a discount from its recent peak of around 190 rupees, providing an attractive opportunity for those eyeing a dip. However, it's worth noting that the company's valuation remains high. If profit growth doesn't continue at a rapid pace, the stock could experience a time correction, allowing fundamentals to catch up with the valuation. Investors should closely monitor the company's earnings growth trajectory in the coming quarters. Cyient DLM Ltd delivered strong Q2 FY25 results, with consolidated revenue rising by 33.41% year-on-year to 389.45 crore rupees, up from 291.83 crore rupees in Q2 FY24. The revenue also surged 51.03% compared to 257.80 crore rupees in the previous quarter, Q1 FY25. Net profit grew by 5.46% year-on-year to 154.54 crore rupees, showcasing the company's robust financial performance. The impressive revenue growth and steady profit increase reflect Cyient DLM's operational efficiency and continued expansion, positioning the company for sustained success in the coming quarters. Cyient DLM Ltd is a prominent player in electronic system design and manufacturing, catering to original equipment manufacturers, OEMs, across various sectors like aerospace and defense. The company specializes in low-volume, high-mix, LVHM products, offering customized solutions to meet specific industry demands. With a market capitalization of 5,480 crore rupees, the stock is currently priced at 691 rupees, boosting a high price-to-earnings (PE) ratio of 82.4. Its return on capital employed (ROCE) is 14.1%, while its earnings per share (EPS) stands at 8 rupees and 39 paise, indicating its profitability in a competitive sector. Looking at Cyient DLM Ltd's price-to-earnings (PE) ratio, the current PE stands at 82.4, which is slightly below its historical median PE of 91.7. The company has seen fluctuations in its PE ratio over the past year, but it remains relatively high. This elevated PE reflects strong investor confidence in the company's future growth potential. However, the current PE level suggests that the stock may be priced for high growth, so investors should carefully consider the company's ability to sustain its earnings growth in the coming quarters. While Cyient DLM Ltd has shown impressive growth in recent years, it's important to note that this growth has not been entirely consistent. Just a few years ago, the company was posting losses, with a net loss of 1 crore rupees in 2020 and even greater losses in earlier years. Despite the recent surge in both sales and profits, with a compounded profit growth of 73% over 3 years, this historical volatility is something investors should consider. The company's turnaround is commendable, but its past struggles suggest potential risks moving forward. From a technical perspective, Cyient DLM Ltd is showing key support at around 618 rupees and resistance near 848 rupees. The stock is currently trading around 706 rupees, which puts it in a consolidative phase. If the price approaches its support level of 618 rupees, it could present a decent buying opportunity for investors looking to enter at a lower risk point. However, if the stock breaks above the 848 rupee resistance, it may signal a strong upward momentum. As always, it's essential to monitor the price action closely for confirmation before making any decisions.